Hello traders, this is Victoria from TRADEPRO Academy, and as promised, we're going to be going through a market profile trading strategy. This is going to be a market profile mean reversion strategy. Now, we're going to be breaking down the specifics of this strategy, giving you a little background on the market profile. But if you haven't watched our older market profile videos, which have come out relatively recently, go and check those out to get a better understanding of what we're going to be talking about today. If you're already versed in the market profile, let's get ready for this. Hit that like button, hit that subscribe button, and drop a comment down below. Do you use the market profile? Right, that's simple, very simple. Do you use it, and why do you like it? So let's jump right into this intro and let's see what we got in terms of this strategy. So first and foremost, let's go through the agenda. We're going to be talking about market profile periods and the initial balance. We're going to be talking about single prints, tails, and the reversal strategy, talking about mean reversion. Now, in a market profile, realistically, when we're talking about mean reversion strategies, when you look at a market profile, when you look at any kind of general profile, if we keep it in its simplest terms, right, we denote profiles as normal distributions, right, which is very poorly drawn. This is not symmetric at all. So let's see if we can draw it better. That's a bit better. Anyways, what a normal distribution is, right, we have a mean here. We have the first standard deviation, the second standard, or the first standard deviation, the second standard deviation, so on and so forth. Right, the first standard deviation is going to be X units away from the mean, and the mean is going to be the area naturally where the largest sample size sits. Now, when we talk about the overall general profile, the normal distribution, what we have going on here is when we're looking at market prices outside of the general balance, we will look for prices to actually revert back into that balance, meaning that this is a mean reversion strategy. This would happen when you can see there is an unfair high or low in the market. That's why we call it a mean reversion strategy. When we get too much of optimism and emotion that escape the overall balance, we're looking for prices to come back to their senses and come back towards the mean, which generally is going to be the point of control. So the market profile, like we've outlined before, just to give you a little background again, has several periods, each denoted by a 30-minute time frame. Now, when we talk about this, each 30-minute time frame creates a lettered period, which starts with A on the regular trading hour session. So they go A from 9:30 to 10, B from 10 to 10:30, so on and so forth, C, D, E, F, G. Now, each profile has a value area and a point of control, along with an unfair high or low. Now, the initial balance is the first two periods or the first hour of the session. This is going to be important later on. Understanding the initial balance, right, where the highs and lows of the initial balance sit, are going to help us with this mean reversion strategy. So talking about single prints very quickly here, remember that a single print in the market profile establishes emotional trading. This is an area where you get multiple levels, right, that create a straight line through some of those levels, right? So we create a single print, meaning that one singular period is presented only at these key levels. For example, V in this case, right, we have G, we have so on and so forth. So these single printed areas represent emotional buyers and sellers that get a little overzealous and create a larger push in the market. Now, single prints are letters, single areas that do form actually within the market profile. And when we look at Sierra charts here, this is the platform that we use, they get established, right? We get to visualize them with this dotted line that I just circled twice. So each of these dotted lines represents our single print areas, right? The start of our single print areas. These single prints are generally used as support resistance guidelines. Single prints are very valuable. Now, in this strategy, we're going to be focusing on those single prints, but we talked recently, just before this, about unfair highs and lows. So why don't we use that combination of single prints and unfair territory to understand our mean reversion a little better? Now, this is where tails come in. This is the premise of our strategy, a market profile tail. A tail is a single print sequence that is found at the end of the market profile on the intraday, meaning it's going to be found at highs or lows of the market profile. Right here, there's nothing, but here at the bottom, there is something. So what this represents is unfair market movement, right? Meaning that there is emotional selling that happens at these lows, right? There's emotional trading that happens generally in this profile that we're looking at. But when we get a single print at lows, this has to, number one, be outside of the initial balance, right? That means the first two periods, A and B, on a regular trading hour session is excluded from the creation of the tail. When price for C and beyond creates an unfair high or low, that is what we would consider a tail in the market profile. Now, these are going to be important because we want to identify these areas as emotional buying or trading outside of the initial balance because they can represent a mean reversion that is a huge reversal pattern. Now, a tail at the top or bottom is emotional market participants entering the market, creating an intraday imbalance. This intraday imbalance can continue for multiple levels to the downside or upside. In this case, we have a downside print. There's no set amount of single prints that will form like 10, 15, like 5, 3, whatever the number is. There's no set number that's going to form. And then you say, okay, let's reverse this, right? This can go on for quite some time, right? This can go on and create an actual new balance below. But the point is you want to identify these areas as potential trade opportunities for a mean reversion, right? The expectation of this is that it does return to balance. So how? How will this C period return to balance? When we have seller tails, they're going to be at the top of the profile. They happened because longs got too emotional and happy. They rebid the tops with large size and no one came to help them out. So when buyers move the market, you get constant rebids, right? You get constant market buyers, and buyers have to show up above prior buyers. Buyers have to continuously buy near tops, small pullbacks, and continuously show that they're strong. An emotional seller top tail becomes a move that creates a strong push to the upside through maybe a key level, right? For example, this distribution block where a lot of buyers got overzealous, but there is no momentum to continue this going, right? There's no new buyers that try to step into this price. And subsequently, what happens is the strong-handed sellers come in, notice these guys are stuck, and put that thing back into its mean. Now, buyer tails, right? They're at the bottom of the profile. Shorts getting emotional and getting selling into lows. They're getting trapped. Strong-handed buyers come in and they're waiting for them to come in. And this is exactly what happens at C. Emotional selling, strong-handed buyers step in. We mean revert back through the start of the distribution, right? Where there's multiple periods that stack up. We mean revert and then we even go back into the highs of the session. So this is what I'm talking about. There's two ways to look at this. I talked about this in our live trading room. You guys can go and check that out where we do this live every single day, but this is also European time zone. C period, right? Huge tail at that C period. We're getting some stuck traders too, right? These silly longs might actually do it above that 34, right? The profile is telling us they could be in. So all of this is broken down for you guys, and this is the explanation of what's going on right here. Above this ledge, right, especially above 32 to 34, we have these guys that can mean revert this back to the upside. And there's two ways to look at this, right? Two ways to enter. Number one is going to be wait for stuck traders on the DOM. So I talked about this before, where you can get an extended period of tail, right? They can go on for quite some time, like boom, 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 for a very, very long period of time. Now, you can find that reversion if you can find where the stuck traders are. And this is the harder of the two alternatives, where you have to be fairly versed in the depth of market, the DOM, which we, again, have a bunch of videos on our YouTube channel that you can go check out, as well as at TRADEPROacademy.com. Now, you have to find where these sellers are actually getting stuck, and you have to find where they actually rebid price to take a shot long into the mean reversion. Now, the second premise of this, the easier I would say, is actually wait for the acceptance into the balance, the break and retest, and see if you can get that continuation through the balance side. So number one, if we're looking at the stuck shorts, right, large market sellers are coming in. No downside, cumulative orders. There's a rebid on the buy side of market order. So let's break this down. This section of the depth of market. What happens down here? Number one, there's a lot of negative delta. If we take a look at this, you have 400 sellers, 343 sellers here, and they can't push prices down. These are market sellers that come in pretty much at once. You have large sellers that are imbalancing at these lows. And then all of a sudden, right, when you get these large sellers, prices have to go down. All of a sudden, you get a strong buy block at a few different levels. You got 1,200 buyers here, right, against that 900. Very weak buy side, but once these 1,200 buyers show up near this 30, nice positive delta. What happens here is you have to remember the reaction and the speed. Generally, how this goes is they go sell, 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 sell. A lot of sellers accumulate at lows, right? They try to push, maybe they hold stagnant at a level. All of a sudden, when the bid comes in, they go boom, buy side pulls down. Boom, again, more buyers pulls down. Boom, again, more buyers and pulls down. How these interact with one another is very important to understand how we can actually get that turnaround. If you want to know more about these stuck traders, go and check out the video that we have on YouTube about stuck traders and reversal in price based on the depth of market. Now, the other part is we can find the start of the balance. The start of the balance, 32 to 33, and we want to wait for price to rebid above that area, right? You can see this is the wick tail. This is where the C period comes out. They get stuck. We move back within the balance. We're looking to enter into one of these two X's to continue that mean reversion, right? So this is the main premise of how we look to actually trade this mean reversion strategy based on the market profile. If you enjoyed this video and if you like this video, I want you guys to smash that like button and hit that subscribe button for when we drop more videos like these. Now remember, comment down below, have you seen this mean reversion strategy before and what do you think of it? We've covered how we should look at this profile, what these different periods mean, when to look for the mean reversion, and how to actually enter into these areas. So keeping that in mind, let me know what you guys want to see next in terms of the market profile. So thank you for watching, and I'll see you guys next time.